This shoes store financial model is designed for businesses that operate in shoes and related products industry. It has been designed to forecast up to 5 years of revenues, operating budget, cash flows, and financial statements. Starting off with the input sheet, here you provide all the related details about the business, such as investment and loan details, revenue assumptions, where you provide per unit price and cost, also the first month sales and the growth rate per month. Then there is monthly employee payroll, operating expenses, capital expenses, and other assumptions including accounts payable, receivable, and inventory. Moving on to revenue analysis, here the revenue for each product is calculated separately for each month based on the unit price and the number of units sold in each month. Similarly, the cost is also calculated for each product separately, and in the end, the total revenue and total cost of goods sold is calculated for each month. Startup summary provides you with the details of your total funding and subsidy expenses. It lets you evaluate the feasibility of your first year of operations. It also provides you with the details of your total assets, liabilities, and equity. Dashboard shows you a visual representation of how your business will be performing over the next 5 years. It includes expense distribution, profitability analysis, cash flows, and break-even analysis. Also, the key performance indicators are mentioned at the top of the dashboard. Loan schedule includes a monthly installment for each loan for the next 5 years. It also includes the interest and principal payment and remaining amount at the end of each month. Loan schedule includes the monthly installment for each loan for the next 5 years. It also includes the interest and principal payment and remaining amount at the end of each month. Depreciation schedule sheet includes the monthly and yearly depreciation expense for each fixed asset. In the asset details section, it includes the current and cumulative depreciation, net book value, and profit or loss in case of sale of any of these assets. Monthly income statement provides an overview of the monthly profitability based on total revenue, cost of goods sold, gross profit, total operating expenses, and net income after interest and taxes. Yearly profit and loss statement summarizes the details provided in the monthly income statement and provides the annual profitability measures. Cash flow statement provides the details of all cash inflows and outflows in a given period. It comprises of cash flows from operating, investing, and financing activities. It also includes the total net cash increase or decrease and net cash in hand at the end of each period. Balance sheet is a statement of financial position that includes the summary of total current and fixed assets, total liabilities, and capital. Break-even analysis provides you with the number of minimum sales revenue your business should be making in each month or year in order to avoid losses. Sensitivity analysis provides you with a measure of riskiness in the business. It calculates the total gross profit and EBITDA for three different scenarios based on changes in revenue and cost of goods sold. Project evaluation calculates the total net present value of the business based on free cash flows, cost of capital, and a terminal growth rate. It also gives you the internal rate of return, burn rate analysis, and minimum investment requirement. Diagnostic Tools evaluate some of the key performance indicators of the business against industry standards for each year and give an opinion if the business is performing normally or if there are any issues.